Hi, thanks for tuning in. This is the US Futures Weekly Chart Analysis for the week ending 30th of August 2024. First chart is the US Dollar Index Futures, which you can see did recover a little of the lost ground this week, which was expected. That put some of the associated markets under a little pressure this week, which we'll see as we move on. Now, the interesting thing here, here's the lows of the range I was expecting, and this market actually moved down, really just touched. This is the last gasp lows of the range until we get to this level. Here was the logical level above it, perhaps even there, and this market was unable to reach that level this week. Now, maybe it'll do it this week, but I'm not so sure. Volume was below the average. It was reduced and below the average. And really the market should have been strong enough to move up to this level at least. I was expecting it could have come up to this level, at least possibly, but it wasn't strong enough to do so. And when the market pulled back, it overshot this level to the downside on this red down bar here. This suggests there's an ease of movement towards the downside, and a push higher is more difficult. If the market can't muster some extra strength this week, and this week's volume suggests that might be difficult, the downside is more favoured in this market. It doesn't mean the market's just going to collapse like that, but it does mean the downside is more favoured. It's easier to move lower at the moment than it is to move higher. And that's going to play its part in all the associated markets. Let's look through them. This is the E-mini S&P 500 Index Futures. You can see the market pulled back recently, and it pulled back to this level, which is a nice logical level. The market had been moving higher on reducing or low volumes down here, reducing or low volumes. But then when the selling pressure came in here, volumes increased considerably, but spreads were, well, they were increased, but they weren't as increased as the volume suggests. And buying support emerged here. But then the markets moved higher again in response to the buying support, and volumes are below average again, which is a little disappointing. The spread last week was very narrow. Spread increased slightly this week, but this week the market was consolidating here, adjacent to the previous highs or just below them. This market's not strong at the moment, but the market's not particularly weak either. So it's trading tentatively. It perhaps might like to continue higher, but the lowest volumes, when it does so, suggest this market's not strong at the moment. US Treasury 10-year note futures. You can see this market's pushed higher more recently, and in the last few weeks, the market's been trading in consolidation mode. This week's volume is very high due to contract rollover, although I must say contract rollover volume this month is very high. Here's the previous ones here in the background, and they are considerably lower than this week's volume, which most likely means that normal volume this week was increased and spread actually narrowed a little bit. So it would appear that there was buying support in the market, absorbing and removing supply, which will leave a path towards the upside open should trading conditions become more favourable again. A break above the highs of the range here would be your trigger for a push higher. Copper price futures. Copper price futures have broken down more recently here, but there was a reluctance to move lower down here. Some buying support emerged at the lows, adjacent to this period of consolidation in the background. Price pushed higher here, but with no real intent. I expect the market is just building some strength down here, perhaps doing some accumulation just above the $4 level. There was some supply drawn out this week as price pushed just above this line. So I would expect this market will move back sort of into this level here. Whether it comes all the way to the lows or not, I'm not sure. It'll probably depend on trading conditions in associated markets. But I think this market may move into consolidation mode sideways, possibly into this level here or just sideways here, and continue to build up some strength prior to any serious attempt to push higher. Gold price futures. Gold price futures continue to trade pretty comfortably higher. Now the market actually closed slightly lower this week, but with a very narrow spread on reduced volume. Volumes have been reducing over the past few weeks. If we go back, here was your initial attempt to break out, which drew out a little bit of supply. So the market came back and tested for supply in response. That would have been consolidating and absorbing right at this breakout level. In response, price pushed higher with a reasonable spread, but on reduced volume. Since then, the market has been trading in consolidation mode, really. Right up there. Normally when some weakness comes in like this, price will pull back more deeply, but it hasn't done so. There's no impetus to move lower at the moment. And while the market isn't showing any great amount of force or effort to move higher, there's no real push lower either. So spreads have narrowed over the last 2 weeks, and price is just trading in consolidation mode, sitting up there, absorbing any supply, and that'll open the door for a further push higher when trading conditions improve. Or if any weakness does come in, it appears this market is reluctant to move lower. Silver price futures, always a little more volatile than the gold price. Here was the breakdown line. We saw price move below it, a weak response to it. Some buying support came in here off the lows. There was a positive response to that. And then last week, price made a slightly weak attempt to recover back above this breakdown line. Spread narrowed last week, but volume increased, which shows the difficulty of recovering back above a level like this, because there'll always be some supply drawn out from the left when the market tries to recover back above a previous breakdown line. And that's effectively what's happened this week. Supply's been drawn out. The gold price, which sort of supports this market, was sitting up there with a very narrow spread. No real force or effort was being shown in either direction on the gold price. And this market, in response, has pushed a little lower. Volume reduced slightly to average, but only very slightly. And the market's just closed a fraction below the old breakdown line. I don't think any great deal of damage has been done here. I don't think any great deal of weakness has emerged, but the market just found it a little difficult without much force behind the trading towards the upside, and has drifted lower and has closed back below the breakdown line where the supply probably eased a little. Like crude price futures, starting to look a bit like it did over here actually, where trading was a bit jumbled up and overlapping. You've got these bars here that don't make a great deal of sense. When there's weakness come in, support comes in immediately in response. The market attempts to move high, but then drifts lower on high volume. The market remains in that level, sort of between 70 and 81, where the market's traded for quite some time previously. There's no great indication of direction. Volumes are certainly high. I feel there's a reluctance for this market to really move lower, but supply is coming in each time it attempts to move higher. And we sit within this level between the 70 and about 81. So I expect the market will probably remain within that range in the near term. Euro US dollar currency futures. We saw the market break out here and push higher. This week the market's come back with the strength in the US dollar. But you can see that wasn't really supported. Volume reduced and was below average. The spread was still pretty wide, but that was likely because demand was low and what buyers were in the market were forced to push price down to find enough buyers to satisfy their selling. So that might be a little exaggerated over what it would have been in a more balanced market. The key here, I think, is that volume was reduced and below average. And that probably suggests that the US dollar isn't going much higher, and this market will perhaps respond and move a little higher. British pound currency futures. British pound currency futures have been pretty clear lately. There was an attempt to break out here. Price came back, tested the breakout for strength. Strength was found here. Price moved higher again and above this level. And when weakness came in this week with the strength in the US dollar, volume reduced, was just a fraction below average, but this bar closed within the 50% range of this bar, about there. That suggests this market remains strong. Buying support is in place, and when the selling came into the market this week, there was enough buyers to satisfy the sellers, and that's kept the spread a little narrower, at least when compared to the euro. Japanese yen currency futures. We were looking at this level here, sort of through here, and price broke out above it last week after some weakness was seen previously. But that weakness was tested and found selling pressure was low. The response last week saw price move back above this level, but there was no serious attempt to push higher. Volume reduced, so prices drifted lower in response. It's effectively testing this breakout line for strength from above. So we'll see how the response goes. What's effectively happening here is a test of the breakout. And if there is strength in the market, you'll see price respond positively to it. If weakness continues to emerge, you may see a secondary bar like this. You'll see price come back and trade like that next week. It'll just depend on how much strength is found at this important level here. Aussie dollar currency futures. We looked at the price tentatively breaking out above this level. It pulled back really sharply. Buying support came in, although there was a seriously long tail on this bar, which was a little unusual at the time. It's traded as a shakeout. It looks like a shakeout, and it's traded as one. Prices responded positively to it, and it's moved up to the previous highs up here. This week, price made a unsupported attempt to move lower and then tested for supply for the rest of the week. Volume was reduced and well below the average. So the market's actually consolidating at this 68 level, and it doesn't look like there's any serious attempt to push lower, which suggests the market might like to go higher, and that in turn suggests the US dollar will go lower. So it's all lining up to say from the euro, which saw selling pressure being low, the British pound saw the buyers present to absorb the sellers, and the yen testing the breakout for strength, and the Aussie dollar now supporting at 68 cents. This all suggests that the US dollar is probably likely to move lower, and these other markets will move higher to some degree in response. Bitcoin futures have been a little disappointing this week. I really expected the market would make a more serious attempt to break out after a shakeout, a test for supply, a little bit of testing in there, and then a push higher. The market made the weakest of all weak attempts to move higher here, and instead prices pushed lower. Now, it may just be a timing thing. I'm getting a little impatient. The market shouldn't take this long to resolve its issues and either break down or move higher in response. But sideways is what it is at the moment. Now, volume was increased this week. It was pretty high. But in response, the market didn't move that much lower and it closed within this bar's range. So there is some buying support still present. But if there is selling pressure in the market, price is rarely going to move sustainably higher when there's sellers present. So you may find this market is forced to test for supply again next week, or at least early next week. So that's going to mean a pullback and recovery to challenge any sellers in the market. Now, if there's sellers found present and they're difficult to absorb, there may be an even deeper pullback in response. But what will generally happen, at least early in the week, the market will drift a little lower, which will put the pressure on anyone who's thinking of selling, and the market then will get the chance to absorb or remove those sellers. And if that's successful, price will just pop up pretty quickly and close probably adjacent to the previous bar's close, back about this level. Now, if that happens in the first couple of days and selling pressure is found to be relatively low down here, there may be an attempt to move higher in response. But if selling pressure is ongoing, you may find there's a deeper pullback, like this or this or this. So just wait and see what happens early in the week. With this much supply in the market, the big volume this week, it's really difficult to see the market make a serious attempt to move higher when there's supply present. Much more likely to test for supply early or over the weekend and then attempt to push higher if it can be seen that selling pressure has reduced. Back to the US dollar index futures, just quickly to wrap up. Now, you can see clearly that the market did overshoot this level and move down to the last gasp levels. Here was the level I expected price could recover to, and it showed it was unable to do that this week. If the market's able to do it early next week, that will void some of the weakness that's inferred by the inability to move up to the logical level this week. But it really does suggest that it's easier to move lower at the moment than it is to move higher. And that suggests that the market will probably roll over at some point. There may be a weak attempt to move higher, but there's no impetus, there's no force or effort in the market to push the market higher. It's more likely to go with the path of least resistance, which at the moment appears to be towards the downside. So look for the market to drift lower, probably retest these lows down here at some point. And if the weakness is really strong, this is the next level lower here, which is just below the 100. It does look like the market's not strong enough to move higher, and it will more likely move lower, and that'll offer tailwinds to many of these associated markets. Okay, thanks for your time. Back again next week. See ya.